Hey everyone, welcome back to Crypto Cash. Thanks again for joining me here. I hope you're having a phenomenal day. Taking a quick look here at Bitcoin, seeing what's going on. Wow, what a crazy thing to wake up to. I slept through some interesting behavior here today. We're going to look at this here. It basically looks like, what was it? Drum roll please. $1.56 billion in liquidation in under 12 minutes on Binance Futures alone. That is some insane money coming out of the market. So again, massive dump there. Has since recovered roughly halfway. It's about a 9% correction from top to bottom. So I would just say that at this point, patience is paramount. Okay. Now, if you you bought the dip already, good for you. Awesome stuff. Hope you had some limit orders. If you didn't, let's just see if it's worth taking entry, if it's going to pull back any further. Okay. There's definitely no guarantees, but I'm very curious what happened here. So take a quick look at this point. Just to quickly note, we got some massive liquidation there. What do you know? That 41,500 range that I talked about previously did get swept completely. So it wicked all the way down to about 40,400. My goodness, that was a lot of movement. So big surprise that this liquidation occurred here. So basically what that tells us is there's really not much left below us in the last 7 days worth of trading. So anyone who's been opening long position in the last 7 days, we don't really see anything else. What we do see here though is if we look at the monthly, some important things to recognize. Still there, 39.6, 39.5. That's that heavy level liquidation secondary to the one that just got wiped out. And if you look at it, it's way more liquidation than the current. So it would make a lot more sense for the price to continue to pull back because of that, just because of the simple fact that there's so much liquidation occurred right there in the last month. It would make sense for that to get swept. Okay. Again, that's just how the bulls and bears are, or just the whales more so that decide to be bullish or bearish. At this point, they're definitely leaning towards bear town. So we did sweep that lower level. Let's quickly look at the weekly too. It's important you guys watch through this here because these are things that are going to be relevant in the big picture because they got a lot of questions on like key level supports and resistances. And we can look at smaller time frame ones, but I think larger time frames are important to recognize. So price does pull back again. This is more so a worst case scenario here. Absolutely worst case. I'm not saying it's going to happen, but I do want you to be prepared and to maybe have some limit orders set just in case. Based on Fibonacci, based on the most recent sequences, most recent low to the most recent high. Again, the high is still tentative. We don't know if this is the highest point, but seems kind of likely at this point. If the price does pull back, it's typical for the price to bounce back off of 0.382, 0.5, 0.618. To make it simple, 38,000 is a round number, 35,500, and 33,000. Okay. So 38, 33, and 35.5. Those are the three areas of which the price could pull back to. Is that a likelihood? It's very unlikely, honestly, that that's going to happen. But if we do end up losing this level here at about 41,000, which is tentatively a support, then there's a decent chance that the price will continue lower. Okay? More so if we sweep that lower level at 39.5, we could see the price continue a little bit further down. So again, that's why we got a couple of different fibs here. That we got the daily fibs and the weekly fibs. Just give us perspective on that. So I hope that that is beneficial for you. But on the more recent time frames here, 40,500 is proven to be a tentative support. Okay, and then of course we got 39,000 and 38.3. Okay, so again, if you want to DCA your way into that, if it comes down to it, great. I have some limit orders, pretty heavy limit orders in the 40 to 38,000 range. Yes, I may never get filled, but I have it prepared and ready to go if it does happen. Okay. Again, just some DCA things. I honestly didn't expect the price to come down this low, but who can expect $1.5 billion to be sold on a single exchange in under 15 minutes? That's just crazy. All right. So all that having said, let's go ahead and look at the standard stuff and work our way down here. Oh, quickly to note, I'm sorry, the last thing too, I want to recognize this here. This is extremely important as well. If we take a look at CME Futures, just do look on the hourly. This might be a little easier to see. When you look at the charts here, we can see that this recent futures gap, effectively CME gap, was filled from roughly was about 42.7 to about 44. Okay, so that has been filled. Keep in mind there is an older one here back from a while ago, roughly 1st of December, when the price gapped up from 39.3 upwards of about 40,500. Okay, so be mindful that could get filled fairly soon. It's quite often that CME gaps get filled. I think the probability is over 90%. I'm not saying that's going to happen right now. It could happen years from now. But if the price does break down below, the 40,500 range, which we've kind of already seen retest that level, then that level could get swept here. So just be mindful of that. That's roughly what we're looking at there. Okay, so I just wanted to kind of preface that and throw that out there. It's an important thing to kind of recognize. Take a look at the charts here. Let's go ahead and go to the daily and work our way down and just kind of see. And to clarify too, I already looked at the weekly. We're still above all moving averages. We're not in dire straits at all. Okay, so this is not a terrible situation. We're still technically tentatively above the 20-day SMA. And as I mentioned before, that's kind of a trend setter. So if we can stay above that, close at about just say 43,000 or higher today, we might have a chance of the price going higher. You never truly know, right? Okay, so that is something that's important to recognize, but regardless, it's not like a determining factor, just kind of a complementing factor for the moment. When we see other things here as well, we got our stochastic RSI swinging down. We're still over 50 on the RSI as well. So this is not a terrible situation, but it's shaping up to start like that, okay? Right when we're about to have a convergence on the MACD, we see the price swing down. Total sense, this absolutely happens all the time. I call it an MACD-FU, just kind of a joke, because the MACD is a good confirming factor, but if you're trading only on that one indicator, it's not really worthwhile. So I know some folks use it with high regard. I use it moderately, if you will. I try to use it as confirming, but when it shows that on the daily, not really a good sign. Same thing here with the 4-hour, just kind of letting us know the momentum has shifted, okay? So we got bearish momentum, obviously. We can see the price action pulling back, stochastic RSI, traditional RSI, money flow index, all below 50. That is not great. So even though we're above those support levels on the daily, it's a 24-hour lag. It takes a while. It takes literally 6 4-hour candles to get there, right? So we see this here, and we see that the RSI is below 50. Then we're in a position right now where we know that the transition has occurred, that the middle time frame or the midterm time frame is basically showing the price wants to pull back, okay, or has pulled back, is pulling back. Either way, we're below key levels there. That's the important thing to recognize. With this 0.382 fib level here at about 43,900, roughly just say 44,000, that tells us that we're confirming the price pulling back. Okay, so once again, 44,000 and 45,000 were supposed to be support levels. They didn't hold very long at all based on that significant decrease in value. And now that we are below that, we can presume they're going to be resistance, okay? So that is kind of what we're looking at there on the 4-hour. Let's quickly note a couple of other things. Holding strong with that's 100 and the 50-day SMA. So good stuff there. If you take a look at fair value gap, we can see, of course, that lower lookout liquidity level has been fully swept. Big surprise, we already kind of know that. TD sequential, we're down to a 7 here on this little push, this little downtrend. So hypothetically, we got another 8 to 24 hours roughly of continuation of the downside. It's just potential, not set in stone at all. It's really funky, honestly, when you have these kind of candle wicks too. So truth is, not a lot of confirmation we can get from that. Furthermore, too, if we take a look at the hourly, we can quickly note that we're below the cloud, back below this here. And this is a definitive resistance. So now, once again, 44,000 is effectively the resistance level. It's kind of reaffirming that. The cloud kind of hanging out there. So what we need to be able to reverse this here to invalidate this downtrend is to essentially close above 44,000 at the very least, and to obviously within the next couple of trading days get to 44 to 45. Okay, it's easier said than done. We truly don't know if that's going to happen. I mean, I'm leaning more towards the price action being bearish and the price going down. It seems a lot more realistic at this point, but again, all this strange ETF stuff going on, these emergency Fed meetings, something's going on that we don't know about. And it's, in most cases, to me, when we have situations like this, fundamental stuff, I hate trading fundamentals, so I'm just going to go ahead and steer clear. Consider some alts, but very, very carefully, okay? What I mean by that is 5, 6, 7x leverage trades, okay? And if you take a look at this here, this is a fantastic thing. I mean, OGN, yeah, sure, we took 100% in 1 month and 6 days. Some probably crazy candle wick to the upside, right? However, again, minus this $1.5, $1.6 billion in liquidation, all these trades closed after reaching take profit. So we took 80 to 90% profit on all these trades before they closed out. So yeah, we washed out majority of our trades. We even hit a few, I think, shorts that might have been open. We had a chain link short and a crow long. Really weird stuff going on, but some crazy candle wicks today, right, folks? So you got to be careful. Again, SKL pumped for some reason just before this massive dump, right? So we got a good 232% in 10 days, but then everything else took off to the downside. So I just want to kind of reiterate that and let you guys know we're still in good shape. This was not a bad thing at all. That's why we have low leverage, low position sizing, but more important, we have trailing stop losses where once we've secured profits, our stop loss adjusts higher. that secured more profit for us. So totally in good shape. Again, either way you look at it, calm down, relax, try not to get too hyped about getting into the market. I would say dollar cost average is the best consideration right now for Bitcoin if you're considering it. Maybe start setting some limit orders and see if you get filled on the way down. It does seem more likely we're going to see a little bit more downside than upside. It's rare for things to wick down like this and just to recover instantly. So this feels kind of like a dead cat to me, but we will see in time. So again, patience is key. I think it's important. Relax, calm down, and not worry too much about trying to catch all this FUD. It's not really worthwhile. So I hope that made sense for you. Thanks again for joining me here. I hope you learned something today, of course. And again, you do want to become a better trader, cryptocash.tech is a site. We'll look forward to working with you. Have a good rest of your day. Take care.